May profits be upon you. I hope you guys are doing just fine. I love to see you on a Saturday, excuse me, and give you the rundown. All right. We're going to take a look at the individual currencies. We're looking at Euro USD. I lost my RT money meter. Okay. Now, first thing we're going to do is look at the RT money meter. The RT money meter tracks the rate of change of each individual currency from a futures perspective over a period of 15 weeks, about 3 months. And I update every week. This way we can see the strength and weaknesses of each individual currency so that I can match the weak with the strong with the weak for higher probabilities of success in a trade, right? So we'll see that the US dollar was at 4.82 last week and went up, swung up from 482 to 680, all right? Also, Euro last week is at minus 270. This week is at minus 544. It is going in the other direction. All right. It is swinging down while the US dollar is swinging up. These are the best kinds of matches you want to put together for a trade, for a pair to trade, right? You want to put the strong against the weak, but you want to also see which one is, if they have opposing momentum, that is the best trades, the best setups, right? So let's do some top down real quick. The first thing we're going to note is this is a strong downtrend, all right? And what I want you to also see is that not only did we break this important point of structure a while back, we see the impulse, we see the correction, and now we have price trying to get lower. But where are we trying to get lower? At a very strong support, right? So why am I calling it support? Because price is having trouble getting past this thing. 1, 2, 3. Here we tried again, and then boom. We didn't go past this high. All right. That makes this a weak low. All right. We didn't make a new high. All right. So, but because it swept all this liquidity on the way, this liquidity just gathered up a lot of liquidity. All right. And because it broke these internal highs as far as microstructure is concerned, it did have some strength. So it took some doing to get past it. Look at that candle. That is an institutional candle that just says, hey, we're bringing this price down. All right. The institution is trying to bring the price down. And those are the footsteps that we track, right? We want to, as smart money traders, we want to follow smart money. All right. Because we're not smart money. Let's be clear. Just because we use smart money concepts doesn't make us smart money. It makes us smarter because it makes us smarter than the average guy, but we're still retail traders. We are retail traders that are following the footsteps of smart money, the institutions. This is an institutional candle, all right? And it's saying we're bringing this price down, and that's that, all right? So just understand that we are demand. I didn't mean to do that. Excuse me. Let me get that off. All right. So demand is not in control. Supply is. So what I want you to see is, if I can get back to, all right, if I can get my drawing. All right, I got it. I'm looking for something to take notes of. All right. This is our demand. All right. This is actually the demand area, all right, on the monthly. And you can see that price eating right through it. And we are at this part, the nitty gritty. All right. And we are almost through it. And I also want you to make note of something else on the close up. You see how price opened for the new week with no wick? All right. Just boom. We want to go down lower. All right. The thing is that low didn't take that low. All right. That low didn't take the previous low. I'm making note of that. All right. I'm looking for these wicks to get filled, just like this one. I was looking for it to get filled. Boom, Boom. I'm looking for this one to get filled too, and I'm looking for more bearishness. All right. Is there a possibility that price can come back up and maybe test the base candle of this bearish engulfing well, it's kind of like bearish engulfing, you know what I mean? But yeah, there's a possibility that it could come back up a little bit and then come back down. Let's look at the weekly. There's a possibility, but not a strong one. What I'm noticing on the weekly is the strong highs are being protected, all right, and the lows are being taken out, all right. And I also note this bearish engulfer. This is a very strong bearish engulfer. Come on, man. But this pin, man, it took the high. It swept the high. I always look for that sweep. All right. And then it swept the low in the entire candle. Swept it, closed below it. Strong indication of more bearish action to come. Could price pull back up, test the base candle here? Sure. We can wick up on Tuesday, or the banks are going to be closed on Monday for US dollar for the US because of the holiday. But we can see price move up and then come back down, yeah, for a little bit. But it's a weekly. It's the weekly, and you can see that price also had an impulse correction. I'm looking for this impulse to complete, right? So that's my perspective on it for the weekly. I'm bearish on the daily and the weekly. Got it? I mean the monthly and the weekly. Let's get to the daily. Things get a little interesting here, right? Look at the daily. Look how the week last week started down, and then we're breaking down here. I didn't want to do that. Come on, man. These writing tools, you know, there's too many. Okay. So what I'm looking at rather, is how price is trying to fill in these wicks. This one closed lower. This one, the Friday's wick closed low was lower, went lower anyway to the previous day, and it is a bearish engulfer happening here. I'm looking for price to continue down. I'm looking for that low to get taken. It was for liquidity, as you can obviously see, and this we have, you know, this one was taken, and we have a relative equal lows here, relative equal lows here. This is going to be a draw for price, for liquidity. I'm looking for this wick to get filled and further downside action. Easy to follow so far, right? When the higher time frames are bearish, we go to the 4-hour and look to handle our business, right? Let me see if I can get rid of this. Please. You're not doing it. You're not doing it. Maybe that's not it. Okay. All right. So there you go. There it is. All right. I'm gonna get it straight one of these days, folks. Just give me a little patience. I don't do a lot of I don't do any editing on these videos, so bear with me. Okay, so we have some supply, 4-hour supply. We have this demand. This demand is for a refined version of the monthly. So we're coming down to the nitty gritty of this monthly. We see the relative equal lows here. I think this is going to be a draw, a magnet to bring price down further. You can see that we had a lovely bullish engulfer that did not see follow through. Why? Because the bearish momentum is just a bit much and we're in a downtrend. And holla at me if you took that low. I gave this setup, did some video on it last week, and I gave it in the chat. I said this low from this 4 hours zone of supply would be huge, and it was. And I'm looking for, after this impulsive looking structure there, I'm looking for that correction and further move to the downside. So folks, what you want to do in this situation from a swing perspective is wait a minute. All right. I want to see a close below this this I want to see this what do you call this demand zone taken out. I want to see it cut. All right. When I say cut, I don't mean just a wick below it. All right. I want to see a close. I want to see this a full candle close below it. All right. And in that situation, I'm looking for the flip. If price takes out this demand with a close and leaves a supply zone above it, right around here, this is the optimal area to take a swing trade to the downside, a sell. You understand? That would be, you know, that's the safest way to take a trade. All right. And you could go down to the once that happens, as soon as you get a close below this this demand zone, and it cuts this demand zone. All right, because we've already taken the liquidity from this low. We may see price come all the way down and take the liquidity from this low as well. All right, and you can also see this as a larger demand zone. You understand? Can you see it? I hope you can. All right, on the 4 hour, this is a larger because of this bullish engulfing and the retest of the base candle and the pop up. This is a great demand, but this is a refined version of it. We have two parts here. We have the lower nitty gritty part down here, and which we are already penetrating. So look for a demand that is left behind. If price comes back up, that'd be the place to take an optimal trade entry. Why do I keep erasing that? I don't have to erase that. Okay. And I'll put a little arrow on it. Smash the like button. Smash that like button for me if you like what I'm like what I did there. I like what you did there. All right. And I will see you in the next video. Hey, all right. Make sure you subscribe and share it with your friends. All right. Share this link with your friends. Turn people on. You know, I'm thinking I'm doing some good work here. Let me know in the comment section if you think so too. And if you took that Euro trade, that Euro setup anyway, last week, give me some feedback, man. I want to hear from you. I'll see you in the next video.